I should be recording. So again, the presentation is locking the power of dimensions and account structures. I just want you to know that when in an implementation, I will spend probably as much time on financial dimensions with the client than just about any other area because there are certain things that it's important to get it right and to try to make sure you're getting the capabilities out of it and really understanding what the capabilities are to really do a good job for your client. So dimensions are one of them, and I'm going to go through the dimension structure. Feel free to ask questions, or we can also spend as much time after this presentation to be able to answer questions. So again, this is me. You've seen enough of these on the other presentations, but it may vary as to how many years I've been doing it, depending on when this was. But generally, I've been working in the field for about 35 years and probably 16 years or more now with dynamics. The problem is that when you get a certain age, the years go back by a lot quicker than what you're used to. But the only other thing is that I want you to know, as part of my background, is I've helped design ERP systems, and that gave me a lot of background in how these processes are designed, and so I've got a pretty diverse kind of background within the ERP area. In fact, one time I made a living writing add-on products for a product called PointMan, which was acquired by Mapex later on in its career. All right, so here's what our objectives are. One of the things, we always want to try to identify what best practices are. And when I talk about best practices is what are the parameters around how you should use it to get the most out of it. And we'll talk about what those are, but it's how best to use a chart of account versus a dimension. And we're going to go into why you need to look at those differently. Or maybe what you're doing now, because you never know where you're coming from. And sometimes people will use a chart of account when they should be using one account number and a dimension to establish. So when you think of dimensions, really think about a main account and a concatenation of one or more dimensions to identify that total posting is what you're really doing. That creates a lot of flexibility, and actually it cuts down on the number of setups, because if you took all the possibilities and you had uniquely identified them in a chart of account structure, you would probably end up with 100 more accounts or more than what you would use within a good structured set with dimensions. So part of it is to educate people coming from older systems as to what these practices mean and where the options are. So then we're going to talk about exploring the possibilities. And what I'm talking about there is how can we use these dimensions to expand our ideas in other areas. In other words, based on what we capture, we can do P&Ls and expense statements and look at them any number of different ways. And also, by using the best practices, we can create situations where we can, in fact, cut down on the number of financial statements we have to design. I'm getting a ding here, so let me look to see what. Here we go. Oh, there we go. Igor, I don't know if you can see, but that's usually the process that you would see. So, okay, let me go back to where we're at. All right, so we talked about exploring the possibilities. I'm going to talk about that and why it's important to understand what you're capable of doing here. Then we're going to talk about the quality itself. Here's what it boils down to. If you do not control the elements of this posting, in other words, all things are possible, you're going to end up with junk. So what I'm going to suggest is you have ways to validate these inputs and that is whether they're doing it through a journal or they're doing it through another process. And we're going to talk about that too. But if you cannot build quality into the process becomes unusable. So we'll talk about what are those things you can do to make that process more usable. And one of the things you need to think about is your possible distributions. Here's what it boils down to. If somebody has 5 choices to make, there's a fairly high probability they're going to select the right one. If they have 100 choices to make, the likelihood of them selecting the right one is very remote. So think about your distribution, and sometimes it's better to have it in a hierarchical structure, which means based on what I select here, that makes available these other 10 choices. So give some thought to that when you're designing these concepts. You have, all these modern systems, almost unlimited, and therefore I'll show you then how you can make them within a hierarchy to improve accuracy. Then we're going to talk about how posting occurs. And I'm not going to go down to the ledger posting at this point level on these different transaction sets. I'm going to talk about where the dimensions come from in your postings and how then the relationship between the posting, the accounts, and how the dimensions are used within those structures. Because keep in mind, you can have dimensions automatically post on many of your processes. In other words, when you're processing a sales order invoice, you can actually have the dimensions flow into that sales order and then be part of that posting process automatically. And then lastly, other considerations, which whatever else I know there's some other elements I want to show you on how you utilize this criteria or capabilities. All right? Identifying best practices. Okay, so let's start by talking about the ledger account. The thing about a ledger account, I believe, you need to think of it as the what. What is this? So when we talk about office supplies, that is an element that we want to track in the ledger that is a what. When we get into the dimensions then, should be modifiers to that, such as office supplies who, office supplies dimension sales. So now you can begin to see how I have now one office supplies account, and then I departmentalize that or cost center or whatever modifier I want to use to identify then who. One of the advantages you have by doing it that way is now if I have an expense statement I'm trying to put together, I can do it based on what's called reporting trees, which means I can have the same expense statement for different departments without having to redesign the expense statement. It's kind of the idea we have there. So you want to leverage off the capabilities of the system. And so use of what's called reporting trees is one way, where you define the ledger accounts, but then you can say, I want to see it for everything. I want to see it just for this department. You begin to see where we're going there. Now, another thing, but what we're talking about, though, there are some times, though, that you need to facilitate an AX limitation. And an example that I want to use here is the sales tax liability account. It is better to have a sales tax liability account per, let's say, state in the case of the U.S. tax system. Because that really, it doesn't inherit or doesn't use dimensions that easily within that structure. So sometimes sometimes you do have to have additional accounts, ledger accounts, to facilitate a limitation in the system. And again, sales tax liability account would be one of those things. And of course, for anybody outside the United States, the U.S. tax system is a nightmare. Every other country is a lot smarter. So really what we've done here is because everybody wants a piece of this, they've made it so it goes not only from the state, it can go to the county, it even going down to the city. So you might have 10,000 different tax possibilities. And in obviously other countries, a lot of times I've worked with Canadian tax systems and also other VAT tax systems, and certainly they're a lot easier to set up and administer than a U.S. tax system. Quite frankly, if you have many tax nexus in the United States, you usually will get a tax add-on to be able to maintain the tax tables. Okay, so now we're going to talk about the dimensions itself. Now, most of you are not really anything 2009 and before. You don't necessarily care about it at this point, but keep in mind, you may end up getting work on a 2009 system. But 2012, in sense, has unlimited dimensions. The good news is it has unlimited dimensions. The bad news, it has unlimited dimensions. Because I've went out and seen people with 14 dimensions on an item. Now, again, that's kind of, I think, kind of an overkill. But by the same token, you have that possibility. You're not limited. From the standpoint of the dimensions, what's also important to know in the 2012, and that means also the D365, those dimensions can be structured. Yeah, I just heard a ding, so those dimensions can be structured to go with specific accounts. So what I mean, if you look at, let's say you have 10 different dimensions, not every dimension has to be used on every account. So it is configurable. And that's very important, and I hope I can establish that with you, whereas in older systems, you had 3 or 4, or you could even buy some more, but those would show up on every account. What's important about 2012 and D365 is those will only show on the accounts they're used. Or they may show them, but you're not utilizing them. So in other words, I can have a balance sheet. Well, I get some examples later. I'll show you a balance sheet that has no dimensions. And then I can have a cost of goods sold account or a revenue account or an inventory account that would have multiple dimensions because I want to know what site it is. Also, I may want to know what product line it is. And from the standpoint of sales, I want to know what customer it is. So you can see the power of this is that I can configure on a per account basis, which is very, very powerful. So now when I have 10, I may only use 3 here. So you can begin to see where I have an almost unlimited amount of possibilities here. And the other thing I want to caution you on is when you're implementing, you can't just take what people have as current dimensions without rethinking that, because they are coming from an environment where the dimensions were all in one string and you selected based on the type of account. You can create now much simpler structures that are specialized to that subset of accounts. Is really important. So departments mean departments, and where something else that's in departments means something else. I can set up a totally separate dimension and tying that to a certain number of ledger accounts. Very powerful. Dimensions also enable us to better analyze information. What you've got is the ability to set up dimension structures that allow you to see ledger accounts within dimensions and dimensions within ledger accounts in my trial balance and, of course, my financial statements. And you can set up a number of these, and I'll show you that a little bit later, but again, another powerful, very powerful type of structure that I can use. And so we're going to cover those also. Any questions so far? Okay. Well, I'll go ahead and continue that. Oh, go ahead.
It's good. No, it's good now. So,
Okay, good. All right. So here's just gives you a little idea of what we're really talking about here. At the balance sheet, and keep in mind, and I'm gonna segue into something else sometimes, just to share some experience on how you utilize this. On the balance sheet, I might want to have the ledger account in the site, and I'm going to suggest to you, and I'm going to segue when we're done in here to another example. But but I don't even have to necessarily have site. But quite frankly, on the things like inventory accounts, I want to have site. What's on cash, I may or may not want to have site. And I'm going to talk about that in a second. Some of the difficulties and the utilizations of the architecture. We get down to our sales and cost of goods sold accounts. I want to have site, customer group, and item group. And I'm going to show you how that's possible. So consider this. I now can do a P&L based on item group and even customer group within item group. Uh, or I can do customer group and item group. So I want you to think about how powerful this is. Whether you have a BI system or not, the fact that you can get this information from the ledger, and actually it's just a matter of setup, that gives you a very powerful analytic tool that you get automatically by using this. Keep in mind, you can summarize it at the site level, you can summarize it at the total level, but using these reporting trees, you now can get almost like a sales analysis coming out of my financial statement. And you may say, well, why don't they just use BI? Well, even if you have BI, it's really exciting to have a footprint in the ledger that can tie to the information you have out of your BI system. It validates the accuracy of your BI. So that's very exciting, and it's not much more work to get here because it automatically comes from the customer, it automatically comes from the item when you're posting sales or purchasing. Now, and you could add vendors, that you might want to do it if it's something to do with inventory or acquisition. You can do the same thing with item group and vendor group should you want to. Now, if you talk about expense accounts, you can go site, department, cost center, whatever else you want to, even down to the person level. And you may say, well, why do we want to do person level? The hardest thing to analyze, and I think I say it somewhere late in the program, is spending. And I'm talking about spending outside of inventory because inventory is tracked fairly well. But what about what it costs me for a salesperson? So I've seen person level used to track salespeople in their expenditures. Pretty exciting possibility when you think about it, that you now can get almost a P&L in theory by salesperson. That's actually pretty exciting. At least a better handle on what that person is spending, because some of the things you'd like to see is what is the relationship between expenses and sales. This person spends twice as much money, but he gets 4 times as much sales. Or they're spending half the money and gets 4 times enough sales. You can see where you can start to do some really analytical processes to really say where are the expenses going and what's my outcome from those. Identifying people that are either exceptional or less than exceptional. Now, one other thing I wanted to touch on while I was here is there's the concept of intercompany and then intracompany. And let me illustrate where I'm really trying to go with this. Intercompany is a relationship where I own both companies and I'm transacting between those. That's a buy-sell agreement, But what you do is you end up eliminating your revenue because it's not really revenue because you're selling to yourself. Where you need a separate company is a different country. We strongly recommend that you use an intercompany type of set of transactions. But let's talk about now we have companies within the same country, and I'll give you, yeah, go ahead. Was there a question or? Okay. Uh, and I'll give you an example of a company that they had, they were organized where their manufacturing company was different than their distribution companies. So the distribution companies were set up, and it doesn't make any difference why. It's just that's the way they were architected. Well, imagine, if you will, that every time you moved from the manufacturing company to the distribution company, you had to do a buy sell because how intercompany works is that you have an intercompany purchase order, which in turn creates an intercompany sales order. So at the point that you ship it, a lot of times you also then a separate footprint in the intra-company, but you still have to have a combination purchase order and sales order, which is a lot of overhead is every time you take a truckload down to the DC. A way to solve that is by using site logic, and site logic can work very well, and sometimes you have to decide based on operations, not just on finance. Now, I know the financial people don't like to hear that sometimes, but in general, think about it. The overhead that would have caused would have been enormous just to support the fact they were two different companies. Here's the trade off, though. In this situation, and this fit very well, the thing you cannot separate is things on your balance sheet. So you may not, you can certainly get a separate P&L, but it's difficult to get a separate balance sheet. The why? Cash comes in, it gets applied to the open items, and you're not going to necessarily have one of those capabilities. You're going to have a separate, or you're going to have one AP, one AR, but generally, what you're concerned about is the open items still come in, let's say at the site level, it's just you can't distribute cash. Most of the time, people have a central receivables and central payables, so it's not a problem. But just so you know that even if it was a problem, it would be better to figure out how to do an allocation rather than everything being an intercompany, because there would be hundreds and hundreds of sales order, purchase order combinations. And in the case of doing it the other way, it's just a transfer order. Very lightweight process that actually satisfies the need, and it just says I've shipped it from here and I've received it from there. And I hope that makes sense to you all. If it doesn't, we can have other conversations about it, but this is some of the kind of how-tos that I want to share with y'all. Some other thing that's important to note, and I'm sure this is D3, the same in D365, is you have what's called operating units. And that's department, cost center, value stream, business unit, retail channel. Wherever you are going to use something like this, it's important you use the operating unit for your financial dimensions because it interfaces to what's called a hierarchy. So what that does now, you could see departments underneath a site hierarchy if, let's say, you were using business unit for site. It's it you know all I'm really trying to say is that these are ones that you should use if they fit in your overall company hierarchy. And some will and some won't, but these will like to be identified in the hierarchy, so there's no reason not to use department, and most of the time people are using business unit for site. And what is important there is site, and just so you know, site can be selected on a sales order, on a purchase order. Site can then also be tied to a financial dimension, so when I post that, it also posts that in the ledger as to what site it was, and in this case it would be what business unit in this example. So now when we look at the dimensions itself, we're showing department here, which then is coming from that operating unit. But you can also add additional ones. Like here's one for item group. Uh, you get the idea that you can in fact create multiple dimensions. You have as many as you want. And the other thing is important. Some of them can be driven by an element within the system, like item group is an element in the system that's exposed to the dimensions, or you can make them totally whatever you can imagine. So you can make them either tied to some element in the system, or you can make them from scratch to be able uh, to identify and make whatever your financial statement or trial balances are granular enough to make sense of the things within your organization. Like I can give you an example. You might have item group, but then you might want to have a subdivision of item group that can be selected to further define item group. Or maybe rather than customer, you want some manner of sales category. You have those capabilities to be able to do that. And you also have the capabilities to make them hierarchical if that is what you're looking to do, because I'll show you that in a little bit. All right? So here's an example of some dimension values. Usually we'll use a numeric. You don't have to, but the numeric a lot of times allows the sorting and grouping to be a little easier. So usually you'll use, I recommend a dimension value that's numeric and then the description that is descriptive. Keep in mind you'll see here, you can also make it a shared value or you can make it on a per company value. So that could be associated with a certain chart of account structure or a certain company is what the advantages are. But think of the dimensions as defining what are the possible choices when I say I want to use this dimension within my ledger architecture. So now we've got the dimensions, and here's where they get tied together. And it's called a little bit different in D365, but generally what it's doing is configuring your account structures. And this is why I talk about the validation. So let's just kind of look at this structure here. And I'm not saying I understand exactly this Boolean, but it looks like it's supposed to be, well, you get the idea. If it's 40,000, and that's probably less than or equal, but the bottom line is you have Boolean expressions for these main accounts that says these are the accounts I'm talking about. Then it's saying if the business unit is 10, then these departments, and what we're saying is that's from 00 to 450 and 600, it's got to be greater than 10,000. But if it starts with a 5, it's got to be between 5 and 6. And if it starts with a 7, it's 01, between 01 and 04. And if it starts with an 8, it's 07 to 08 on the cost center. Does everybody see how that hierarchical structure then would work? Okay, then let me ask the question. If the account was 400000, what would be my possible choices for business unit?
If I have to guess, you don't have 400 because it's smaller than, right?
Oh,
Is it
well, I'm not
smaller or
saying
equal?
let's just here's what my point I'm trying to make. This Boolean, I'm not exactly sure what this one is, and it's just an example I have. But if we say that this account 40 all zeros was a ledger account, and that's the one I've selected, What does it say on what business units can I select?
But I don't think I'm not sure about the exact syntax, but if it's all zeros and it's smaller than, so you cannot select the business units, right? Is it should be smaller or equal? How does
Well,
the
just
syntax work?
let's just say don't look at anything past here. Let's just say the main account is 400000.
So you have 10 and 20.
Right. And that's the point I'm trying to make. And if you have 10, you can see where you can only select those departments. Now, there is something I want to suggest to you here. If this check mark isn't in here, it wouldn't you would be allowed to leave it blank. We don't recommend that, but I want to make sure that you understand that if you're going to validate, you should have a reason to say you cannot leave this blank. Is part of what you're saying. Now, the fact you can't leave this blank means if it's validated against here, all I'm trying to suggest to you is that allow blanks is oh, in fact, maybe this is allow blanks. I'm sorry. This is allow blanks, the check mark. That you should never do that is what I'm trying to say. Because allow blanks means that could be also blank. And the reason, and you can see with this structure, I in theory could leave it all blanks, or in some cases put in one of these numbers, and that could be blank on that side. You don't want to do that because your validation structure falls down. If you're going to allow blank, you shouldn't have the validation, right? Because it means that you can also make it blank. Now, sometimes during the testing, does that make sense to everybody that that you shouldn't allow it blank if you're going to have a selection?
Makes sense, yes.
Okay. So as you're seeing here, now this is a PL shared, so you have as many of these as you want to. And what this is saying is this is one account structure which I can use. So you can have as many of these as you want within the within the structure as a whole. In fact, I'm gonna be putting together downstream an example that utilizes the exact thing I'm talking about with the customer number and the item group. You've just got to be careful when you take and modify one of these. It could be used by someplace else, so you need to make sure that you either create a unique one or you understand that you're affecting all of the places that this is set up for. And I'll show you where they set it up here in a few minutes. So you've got to configure the account structures. That tells you with validation rules. You also have the capable advanced rules, and let me explain what these are. But they're not used that much because I think it makes it more confusing. But if you look at it, you'll notice that the account structures, the P&L shared we just looked at, think about this as a rule over and above the other rules. So what this rule says, it says take what the P&L shared is giving me, and oh, by the way, if the main account begins with a 5, add item group. So all I'm showing you is it's saying that for your cost of goods sold account numbers, I'm going to add item group to the distribution string that I select. I'm not advocating this as much as making sure you know it's possible. I think it's easier to set up a regular rule that's going to cover all those different things. But in some cases, it can make the rules itself much more complex. Because in this case, if we go, I should be able to go to the previous. In this case, I don't have in any of these structures that item group in here. That the other one could add it, is what I'm saying. But I'd rather define it in here, quite frankly. So, but think about it, you do have example rules, and this, like the the T&E travel expense, you could say something like, um, if the department was sales, then add the individual to it. So that's kind of an example of the advanced rules. Now, when we get to the chart of accounts, then here's where we talk about account structures. This is where you've defined the account structures to a specific chart of accounts. Now, I want to suggest to you that the setup is a little bit different in D365, but the concept's the same. What you're doing is you're tying to a set of accounts a account structure. So now you have the accounts that are being utilized plus the account structures that apply to those. And what that means then is that when we, and like I said, it's a little bit different in 365. The bottom line is that in 365, I believe you're going to have what ledger you're going to use here, and then the account structures are within this. But all I'm really trying to suggest to you is that at the company level, you can have a specific set of ledger accounts or a shared set of ledger accounts. You can have a specific calendar or a calendar that's shared by many people. And you can have accounting structures that are financial account validation structures that apply to this singular company. And the rest of this stuff here is just defining multi-currencies situations. So now let's talk about how then do we get these from master files into the to something like a sales order. This is the item master, and this is release product details. What this allows me to do is to set up accounts at this level. Now, the only thing that's coming from this level is the item group. So I have the item group. Now, yeah, go ahead. Question? I want to make sure you know that the item group itself does not automatically set this item group here. But what it's allowing you, though, is to pass the item group when we post other transactions. Keep in mind, I could also have some kind of sales group or item group subdivision under item group should I want to. So you can have as many of these as you want. You can define them on the item master, and then it will pass those over. Now you'll notice you see them all. It's just because that's how it displays. And in theory, you could use any of them, but it's important to note that typically you're going to distribute what would be associated to the item master. And it could be product line, it could be item group, it could be whatever you imagine, as long as you understand that. It can pass these to the sales order and will post to the accounts that accept them. The other side of it, though, that's very important to note, though, is that you have to have this stuff set up right to flow automatically. Otherwise, you will have posting problems. So it's important that this be part of your setup logic that allows you to get these right in the first place. And I can't begin to tell you how many people cannot consistently apply a rule compared to how many people that can. And it varies from company to company, but the power of this overrides the problem with setting it up.
Hey, Don, this is Ed.
Yeah.
I had a quick question for you.
Sure.
I'm having visual problems over here. The visual's not real good. It comes in and out, and I was wondering if anybody else was having that issue.
Yeah, same here. It's probably the internet connection.
Okay, so
Yeah, the
is it
same here, but I think it's the connection or
okay? So is it making sense? I mean, am I talking and then the image is coming up afterwards?
I can hear. I'm sorry, I can hear you, but the screens are very blurred. They come in and out about every 4 or 5 seconds.
Okay, what my problem is that I am recording and maybe that's a problem. Um, I'd like to continue from here, but I'm planning on most of these will be done from Morgantown, where I have a better bandwidth, and I'm also moving down below to the other office, and I'll have better bandwidth, and we'll check from there. Keep in mind
Okay.
this is getting recorded, so the advantage you'd have is I'll post the recording out there, and you will be able to reference that too, and I'm sure the images will be fine there. All right?
Okay.
But let's go ahead and continue, and let's not, because the value of the recording I think is appropriate, and then we'll go from there. And well, that's why I wanted, because this is the first time I'm doing that. I imagine that's affecting, but I wouldn't think the recording would be consuming any bandwidth. But the bottom line is it's obviously a problem that we'll deal with. Okay, so let's go, and now we're going to talk about the possibilities. Okay, so really what we're talking about is things we can drive from the item master. So what we're talking about is items, customers, vendors, and I'm going to go through some other ones for you, but it can be project number. There's a lot of different things that we can drive automatically that will automatically come into the posting. So let's talk about from the item driven. Well, accounts that I can affect automatically are sales and COGS. The inventory account itself. Think about the inventory account can post the site to go along with that. So now I know not only that it's an inventory, but also I can subdivide the inventory in the different sites. That's how I can get a P&L. Or what, that wouldn't be part of P&L, but you get this. You see where we're talking about. I can have inventory by site, and also the purchasing side. So I can say for this purchasing, I was purchasing based on this category. Customer driven. Sales and COGS are two examples. In other words, what happens is the customer or customer group comes in at the header, and then it can go over to the sales and cost of goods sold because it comes down to the item. So I could also say sales by customer group. And when we get into vendor, obviously you can do it by the purchasing or the vendor group, and also it can affect expenses too. So you could also say expenses are based on some manner of grouping. Person, again, you primarily might use person for your expenses. Let me just go back previous because, okay, no, I was just give. Okay, so now we're trying to talk about improving the quality. Okay, so, and again, the point, if you're posting without accuracy, it has no point in using these because you cannot ensure you're getting the right choices. You can't rely on the information. And one of your biggest problems with these kind of posting situation is defining the accuracy. So here's what it boils down to. You need to use validation rules. You can do this without validation rules, but when you do that, you begin to see what happens is that anything is possible. Do not use blank as an option. If you're going to let them go blank, there's no reason to have it. You need to limit the choices. In other words, don't have 50 possible selections on any one dimension. It makes no sense. Because again, if you have 50 dimensions, it's not going to be accurate. So that's as bad as leaving it blank. My magic rule of 15 is what I like to use. I don't believe you should have any more than 15 choices on any one element. Otherwise, you should do it through a hierarchy. So if you end up with 100 different distinct possibilities, those should be divided up into 10 choices of 10, where when I select this, it limits me to the next 10 choices, let's suggest, if that makes sense. You want to automate as much as possible. Don't create situations that you're not integrating the stuff automatically, which means putting dimension on things like the item master. Like item group should always be consistent with the item master itself. And lastly, and I don't know how many times I see this happen, is they'll set it up and they'll be wrong, and then they'll continue to fix it without going back to the source. An example would be I'm requiring item group. Now within the sales order itself, I could put the item group in there to overwrite a solo post, but that doesn't fix it for the next time. What you'd want to do is go back to the item itself and then fix it so next time it comes in. Now keep in mind, when you go change the item, it wouldn't change it on the sales orders. You'd still have to take that subset of sales orders that didn't have it and fix those. Or go into the sales order and do something that it would bring it back in again. But generally, it's important that the earlier you fix it, you're not going to have that problem. One of the things that I also just so you know, in running projects, I hold the financial people responsible that says, I don't want to see posting errors. And if I do, then you're going to need to fix them. And not only that, you're going to have to demonstrate to me that you can do the job properly, which means you don't want something to fail because of a posting problem. And it's really an indication whether they know what they're doing or not, quite frankly, as to it. Because you talk about something that brings a test to its knees, they can't post anything. So it's really important to spend the time to make sure these are right as part of your process. And that's the best way to judge it, is we don't have posting problems and we do get what we want. Understand how posting occurs. So we've talked about, again, and some of this is just a reiteration, but financial dimensions can be associated with most master files, and that's just about everyone you can imagine has dimensions, whether it's from the production side. I don't know if I identify them in here, but generally item master, customer master, vendor master, resource master, just about every master file you can associate dimensions with. And if once you associate them, they'll flow automatically from that master file. Very powerful. And all I'm really saying in the second one is it's important to understand the process, because it's the process defines which ones they're going to use. Like in a sales order, you've got customer, you've got items. That's where that information is going to come. On a purchase order, you're going to have items and you're going to have the vendor. On a project, you'll have project number. There can be a number of different things where that could come, because there's a number of dimensions you can identify within a project. We did talk about site. In Ed, the example you have doesn't have site tied in, but generally site can be tied to a financial dimension, and what that does then is when I select site, I automatically select the financial dimension. That's very important. We use it all the time because a site is a architectural separation. In other words, site now can have these 3 warehouses and have these resources. So you can now identify resources and warehouses within a site architecture. It is a costing structure because you have cost by site. And then it's a financial structure because you can tie a financial dimension to a site, which means when I when I process the transaction that's site oriented, I also post a financial dimension that is representative site. The other thing I'm suggesting to you that's very important to understand is that when you do validation at the transaction level, like a general journal level, that doesn't mean that it's going to post. So validation rules in some cases are applied before the posting, but in most cases at the posting. So when you do a validation, it doesn't necessarily go through all the posting rules. So sometimes you're not going to see it till you post, which means it didn't post and you would just have to fix it. Okay, so again, sales order posting sources. At the header, you're going to have site and customer. And then at the line level, you're going to have site, item, and customer from the header. What this means is you can't distribute, obviously, an item level information at the header. So what's at the header? Header miscellaneous charges, AR account. Those are the kind of things that's dependent on the header. So I think you get the idea is that what's at the header you can only use on those accounts. So therefore AR, in theory, you could have the site, you could even have the customer, but you can't have the item. Whereas down at the sales order line, you can have site, item, and customer because it brings it down from the header. So what's at the header can also be at the line. So we look at purchase order processing. From the header, you would have site and vendor. So therefore, on your AP, you could break them into site and vendor if you chose to. And I'm not saying you do, I'm just saying you can. And then at the purchase order line, you would have site, item, and vendor from the header. So those are automatically going to come in provided they're set up at the item master level. And you could also bring in other things. Project, the project number, the person that can hit your direct labor applied account, and certainly your item can come in. On production order, you could have the production order post, the person, and again the item or the item group in structure there too that would go on your manufacturing postings. Okay, I just want to put this out here that it's the same thing at D365. You have a batch transfer rule. It comes up where it's not set up for synchronous. What this allows you to do is separate the subledger from the ledger, and so that finance can control the posting of the ledger if they choose. Most of the time we just set it up for synchronous, so at the point in time you post it in the subledger, it also posted into the regular ledger. As long as you understand that there are some people that want differences, I just wanted to make you aware of it. Because if you started a new system and you're not seeing any postings, it's probably because it's in a batch transfer mode and you haven't posted the batches. Financial dimensions, we talked about we can look at different financial dimensions, and this I'm showing an example here. What this financial set is ledger account and item. You can see business units, so you can have as many of these as you want. What this allows you to do then is when you do something like in the trial balance, you see now here's that's probably an inventory account there. There's a revenue account. So you can see how you now can get that grouping coming in from outside, and you can see that now in your ledger so that you would see similar numbers then in your financial statement. So just some overall things to think about, and I think we're probably wrapping up here, I believe. The GL is one of the best places to analyze spending because there's nothing else that really does that. You can look at spending from the purchase order perspective, but at the end of it, the ledger is one of the best places to do it because not all spending comes from a purchase order. again, we talked about simplifying departmental expense statements by utilizing dimensions. Now I can have one statement design and then just use reporting trees to show it based on the different departments. You got to build quality into the process or it's useless. If you can't figure out ways to make sure they're putting in the right information, you're not going to have a good outcome. Keep in mind, transferring from one account structure to another can be problematic too, because you might go from a limited amount of ability to an enhanced amount of ability. All that really means, though, is you've got to be able to report based on the information from before to the information now on a summary basis. So you got to think about architecturally, how do I tie these things together for things like comparatives? So when I want to go from one period to the other. Got to understand how the dimension postings work, and in general how the ledger postings work. And we probably can do a section that goes through and just basically works on what these postings look like. I know that you all are sitting on the edge of your seat waiting for that, but it's really important you understand how the postings work, and we'll have plenty of opportunity. But when I post let's say when I post material coming into a purchase order, what ledger accounts does that hit? What dimensions are affected? Those are things you really should understand in detail from the financial perspective. And then last, limit the selections. I can't tell you how many times I went in and seen someone with 50 selections on one dimension. And then they wonder why the information isn't very good. Also, by the way, they probably allow blanks too. So it's really, without building that quality in there, it's not going to give you a good outcome.